If Congress is upset over the Independent of UK calling our Prime Minister Sonia's poodle, they can take solace from the fact that the media has also previously referred to Mr. Cameron as Murdoch's poodle. Well, the window of opportunity to prove the critics wrong has finally arrived. Presidential election over, monsoon session begins on the 8th of August. Time for the Prime Minister to initiate the much-awaited policy reform. But with NCP now on warpath and the TMC remaining steadfast in their opposition, I wonder how the government can afford to ignite the animal spirits. In the context of performance appraisal, Vivek Ranadive, a successful Silicon Valley entrepreneur, said last week that if you do everything that you are asked to do, you get a C-. To get an A+, you've got to do what nobody asked you to do. That, incidentally, is how the street always assesses corporate performance. Companies have to do the unexpected to gain in value post-results. Investors are difficult taskmasters. Even an earnings beat often fails to enthuse, particularly when the mood is bad. Little wonder then that India Inc. can't get past a B in Q1. Finally, an infra major, Lanco, has reportedly asked for restructuring of debt. Amount in question is a modest 23,000 crores. We suspect Lanco will soon be joined by many others at the table. Not to forget the recent talk of debt restructuring of state electricity boards of rupees 2 lakh crores. Almost in sync, last week, RBI introduced stiffer provisioning norms for restructuring of standard assets. Any takers for nationalized bank stocks? As of this weekend, monsoon coverage remains weak, with overall deficit being 22%. While this may turn out to be a blessing for the government to reduce the buffer stock from a record 75 million tons, its negative impact on inflation expectation will almost certainly not permit RBI to announce a rate cut in the next policy meet on 31st July. Unless, of course, the Gov seeks an A+ in its report card. Internationally too, there is very little cheer. Professor Nouriel Roubini has reiterated his prediction of a perfect storm in 2013 owing to convergence of 5 possible factors. Worsening of debt crisis in Europe, US being pushed into recession because of tax increases and spending cuts, hard landing for Chinese economy, further slowing in emerging markets, and possible military confrontation with Iran. Banks continue to shock with their incredible level of incompetence. The popularly estimated trading loss in the chief investment office of JP Morgan in London has now climbed to $7.5 billion. Barclays' fine of £290 million for fudging LIBOR inputs is very likely to be followed by many more. HSBC was fined $1 billion for compliance lapses that let the bank wash terrorist funds through its system. And a recent Bank of International Settlement report states that most national regulators were found to be indulgent to domestic banks in respect of provisioning of bad loans. Globally, stock markets slumped on Friday. Street violence in Spain pushed up bond yields beyond the danger mark of 7%, in fact 7.24%. Brent oil, alongside more soft commodities, hardened to $107. Euro closed at a new low of 1.2156. Brexit was back on the table with a vengeance. Europe was once more on alert to contain possible contagion. Fundamentally, there is little to suggest a recovery. With modest valuations, decent ROE, and a weak rupee is lending support. In the very short term, percentage play is of the view that next week Nifty may test its recent low of 5,180. If it stops short, Nifty will have made a higher bottom. Else, it can record a new low with positive divergence in momentum indicators, which may signal the end of the correction that started at 5,350. It will look devilish though if the low next week is lower and not accompanied by the divergence. In keeping with our trading rules, quant pair funds saw no new entries last week. We should be closing the 2 open positions next week and refrain from fresh entries to avoid event risk arising out of Q1 result announcements. Comparative value fund likewise remain rather inactive, uncertain market conditions making us hesitant to commit further. Percentage play, however, derives satisfaction from the continuing outperformance of the 2 funds at an annualized 26% and 11% respectively in comparison to Nifty. In contrast, our quant trading systems, which are essentially system-generated short-term trading strategies, put up great performance last week. For rapid fire, out of 13 entries, 11 ended in profit, while it made money in 4 out of the 5 days last week. Not to be left behind, PowerSwing completed 2 trades last week, netting a notional profit of Rs 11,300, thereby lifting the return since launch 2 months ago to 29% absolute. If you haven't experienced the excitement and performance of Percentage Play quant trading systems, you will do well to take a free trial to follow our trades in real time on our unique live tracker on our website.